All 11 sectors of the S&P 500 had opened on the upside, yet yields are generally down. In fact, there's an inverted yield curve. We've got the 10-year 152, the 2 years at 155. That's inverted, and the market's not dropping. Maybe this correlation, what's been annoying everybody in August so much, is starting to break down a little bit. But you see, look at this. These are cyclicals up. Semis, energy, materials. Utilities are even up at this point. Banks are lagging, understandably, with the 10-year yield down today. So that makes a little bit of sense. So where are we in the month of August? Is there any hope for September? Well, it's been, all right, a crummy August, but that's the way it always is. So what are we down? 3% here for the month of August? This wasn't as bad as May. Remember May? We were down close to 6%. So everybody says, gee, it hasn't been as bad as then. There's hope springs eternal for September. More central bank cuts, maybe a truce in the trade war. You know the usual hopes for springing eternal for month of September. Where are we right now? I think the important thing is we're not that bad. I know there's all sorts of recession worries out there. August is only down 3%. We are 5% from a historic high on the S&P 500. As for the earnings concerns, which is what my department is, forward PE multiple now 16.8, still a little bit high historically, but it was 17.5 back in July. So even that's come down. There's nothing terrible. Earnings, again, the thing I'm concerned about for the 2019, I have stuck with the flattish term for 5 months now. That is exactly what is materializing. Up in the first and second quarter. We're down in the third quarter, but that's probably going to turn positive. Fourth quarter, still a little bit high, but this is flattish for the year. The question is it going to stay that way? There have been some downgrades in earnings estimates on the cyclicals, on industrials, on materials, and certainly on energy stocks. So that's definitely occurred. But wholesale downgrades that would presage a recession-type environment, it hasn't happened. So I know there's a lot of concerns out there, but corporate America has not sounded the alarm on any recession probabilities in 2020. Certainly, at least not yet. And I think that's what everybody should focus on right now. Are you confused about what to do? Everybody is. I'll tell you something that's gotten a lot of interest. Let's just follow momentum. There is a very interesting momentum ETF out there that's gotten a lot of traction here, and that's this white line here. This is MTUM. It's been generally up all year, and right now it's outperforming the S&P 500 by a very small amount, 3 or 4 percentage points. What's in this momentum ETF, and how do you define it? Usually you just say momentum. Well, we've just got stocks that are moving faster than the overall market. No, they refine this very interestingly. So here's what the major weightings here. You've got MasterCard, Procter & Gamble, Visa, Microsoft, and Disney. Wait a minute. What do these stocks have in common? Well, they don't seem to have much in common, but actually, by the refined definition of momentum in this group, that's what they are. They all have very strong momentum. What does momentum actually mean? It's a little more refined than just saying, oh, the prices are going up overall. Take a look. Under this definition, you have to have 6-month price appreciation combined. It's 2 factors with a 12-month price appreciation. It's not short term, but intermediate term, this price moving and lower volatility than the overall market in the last 3 years. So it's a sort of refined momentum model. It's been working very well. And for people who are confused and say, look, I just want to follow the trend in the market and maybe outperform, that was the one that people are looking at.